Hello, Warriors. Hump Day. How you doing, Galaxy? K-Man, how's it going this morning? I'm going to go to you right away.
Hey, Nick.
How are you, buddy?
Yeah, we're good.
Yeah.
We're good.
Nice Christmas tree. I saw your Skype. Yeah, you're in the spirit. So, Dixie weakening a little bit. You know, if we get through this level, we could have, dollar pull back towards 95.5 or so. It's being led by Cable.
Bit of euro. Yeah. I think there's a bit of repatriation going on as well.
Okay, so
the regular time schedule, sort of. We saw a bit of it yesterday as well.
Does that occur all the way through year end?
It could.
Yeah.
It could. We have seen decent moves into year end some years. So with the Omicron uncertainty, with positioning being rather short euro and sterling, perhaps
squeeze them.
We could see a bit of continuation of this.
Yeah, I think we have a chance for potentially 134, 135 in Cable.
Yeah, there's a bit going on there in the 134s, yeah, on the Cable.
Yeah, right here, near prior high 370, and maybe the euro could do 114 and a half if it cuts through this 1330 level.
That's one, and then there's the old one at 1380, and then 114.40 indeed. Yep.
Yeah. So we get What about yen? This, the yen has been on both sides of this pivot, and now we're pushing highs. Doesn't look like it's done. Came in. Plus yields had a decent kick yesterday after everyone became disillusioned because the Fed tightened and yields dropped. Well, they've recovered above where they were before the Fed.
Mm-hmm. So indeed, the curve steepened a little bit. So
Fed likes that.
Sorry,
Fed likes that.
Well, yes, and yen traders in a way they should like it as well. But again, is it end of year? Is it really a developing move? It's all a bit tough.
Yeah.
Do anything? I would rather do it on the yen short side, but it's end of year. I don't know. I'm not going to stand in front of flying sleighs.
Yeah. Well, if we start penetrating this, there's a shot to take out the bears above this high, don't you think? Next year.
We've been talking about it on the chat as well. Why not close the year at record highs? Well, not record highs, but fresh highs on yen pairs. Could be Aussie, Kiwi, beat. Canada is a laggard, but then the Norwegian kroner is behaving pretty strongly as well. Could all those yen crosses end around the highs? It's possible. Sterling yen back above 152 as well.
And USD yuan, since that one day where they changed reserve requirements, has not given much back at all. Looks like that may have been it.
It might be. Well, it might be one for 2022. PBOC is giving me the impression they want to strengthen much further.
Yeah. Even a bear market rally to 670, you would think, wouldn't change the general trend. A lot of people could say it would just be a correction of this big decline that we had in the last couple years.
Yeah.
Right?
But therefore, we first have to kick back on into above the mid 640s, which is already going to be. There's a small trend right here from April over July. We already need to break above that one, right? Yeah, that's where it is.
Looks like a falling wedge to me, bro. Or here's your channel. Something like that. Yeah, 1640 or so would do it.
645, 647, I think, is going to be a level to pay attention to if PBOC continues to go against the rest of the CB trend.
Okay. What do you think? We've had a recovery in risk from, despair Monday to, we turned, most of the guys laugh at me, but we did get a turn on the solstice. It's a GAN day. It was the beginning of winter. So a new season, it could be a new season for S&Ps if this low holds, and maybe we have risk on into the spring.
Or are the speculators want to print an all-time high before year end and then reconsider once January starts?
Well, yeah, in a week. Yeah, look, I've gotten,
right? If you take 20, 30 pips or points per day, we're there next week.
Yeah, that would really take a lot of people by surprise, because I heard, I'm not real astute on gamma, and after this happened, I mean, there was extreme put buying, and they're stuck. So yeah, we'll see. VIX back into this zone. That was kind of the tell that we were pressing the old lows, and VIX only bounced. But I wouldn't be short VIX here either, though. So I went short vol.
On the yields, you talk about the yields. On the yield side, I think the 10s are, because that's what a lot of investors look at, that 10-year yield. We're still in that range, right? We're still in the range. We tried the bottom side. We tried to break out. I think it's still like, well, on the wide, or not even wide, but like 138, 170 is going to be the big levels to look at. 2022.
Yeah, it almost looks like some kind of triangle here as well. We kind of have a flat bottom, and to me it looks like we start taking out 150. 170's a measured move just from here to here, and then it breaks out. You just add that on, and that gets you pretty close to 170. That would be a surprise next week.
The bond market is turning on a dime these days.
I showed the weekly in TLT, which is a proxy for 20-year stuff, and it's trying to hold here after the Fed, but to me, this market looks vulnerable. So I don't like the bonds, and they really had a chance on that big down day we had Monday. They did nothing. There was no flight to quality in anything that day. No one bought bonds. There was no bid in the dollar, and bonds were flat.
Yeah, and we had twice. Yeah, this kind of try to break, and it's, I think. Yeah, bonds should remain a bit capped, especially going into maybe further into the first quarter 2022, because the market is starting to try to price Fed as early as March. Yeah. So we might see a bit of move there. I think it's going to be interesting this first start of 2022.
I do. I think it's going to be an amazing year for traders.
Yeah, volatility is going to be there.
Yeah. So great to have you on the team, Kman. I really like your commentary, and it's good to be able to go to, someone else. I'm a big believer in intelligence gathering, and you just really, you and Ryan really add to the perspective that people could get every morning before all the big action starts. So, great way to cap the year with your voice and Ryan's voice being here on the team now.
Glad to be there.
All right. I wonder if Blake's fingers hurt this morning. I know he's been doing some double duty. He could probably use a day off tomorrow.
Yeah, they actually still hurt. Good morning, guys. How are you?
Okay, buddy.
Hey, Kman, how's it going?
Yeah, all good. It's my last active day for about a week. Kids are over for Christmas, so I'm going to quiet down for a few days.
Yeah, me too. We'll still be here tomorrow morning. We have this data release, so I'm going to make sure that we're here for it. But shortly after that, we'll be done as well. And you know, positions are getting kind of light now, and I think that everybody's got to, you know, just I mean, I'm surprised that you guys and gals are here. It seems like every day we have, you know, we're losing about, you know, just all week, you know, about 25% of our listeners. You know, everybody just slowly peels off for the remainder of the week. It's how it is every holiday, you know. But that doesn't mean there's not opportunities out there. There are, and I'm gonna take you over to a couple things that I'm looking at. Just that I think you should find that I found, you know, just for those of you that are kind of scalping around looking for some ranges. I don't have a lot of, you know, conviction at these levels. If you don't recall from yesterday, and by the way, we do have final GDP coming on in a little bit. You know, for those that were listening in yesterday, I talked about just kind of getting out of my euro dollar longs, my Aussie dollar longs that I've been in for the last couple of weeks, and taking them off. But like, if you look at the Aussie, in my opinion, right at current levels are at it's at resistance. And you know, we had turnaround Tuesday, you know, on Tuesday this week, right, Dale? So we bottomed on Monday, and the stock market's rallied back. And if you look at like the S&P, you know, we're basically at the 50% retracement, in between the 50% retracement and the 618. And we've had a nice bounce back. I would be a little skeptical about chasing risk at these levels. And I'm not saying that the market can't go up. I think we're just kind of mid-range. So you're losing your edge here as far as, you know,
mid-range.
Yeah, you're mid-range, so it's like you're better off with a toin cost, if you will.
Yeah.
Did I say toin cost?
Unless you're in a
we knew what you meant, bro.
Right?
I'm sorry. What did you say, K-Man?
Unless you're in a position, and then you can manage it. I bought some S&P yesterday below 4,600, and
yeah, but
like a little bit on the way up, sell out in front of that resistance, and then pull your stop up and make it a no risk trade.
Right, but if you're looking for new positions right now, this is not the time to be doing it. If you missed your opportunity yesterday, today's not the day that you necessarily want to be chasing the market higher. Doesn't mean that the market can't go higher, but I'm going to show you a couple of things that are in the FX market that really could suggest that we might not hold up here at these levels. So you take the Aussie dollar. I'm just going back to the Aussie. The Aussie dollar just hit the 618 retracement. We're up against, you know, horizontal resistance. If you're here, let me just show you the Aussie and the evolution of this week's analysis just on ForexAnalytix for those of you that don't use ForexAnalytix. So today's the 22nd, right? On Monday, the 618 retracement at the 70-80 level may offer support overnight. In Asian trade with key resistance at the 71. So I'm like, what does that say? That's my typo.
Ignore the typos.
That was my finger typo. But so the original analysis was, hey, you know, the original analysis was, you know, we have support at 70-80. It's the 618 retracement. We had a false breakdown. We're going to bounce, right? So then you look at the next day, the last update is valid. So the 71.70 to 72 cents may be resistance. And then, you know, this is, you know, yesterday's analysis and then last night. And that was basically saying, hey, you know, it's held, expect to bounce to 71.70 to 7,200. Or 72 cents. And here we are this morning. You know, we are at the 71.70 level. Okay. And we should find resistance at the 618 all the way up towards maybe the 72 cents, which is the 78% retracement. This is really big resistance here. I'm not saying that it's going to stop the Aussie like as a whole, but if you're long risk like the S&P and you just saw the Aussie bounce 90 pips over the course of the last couple of days on Christmas week, you have to be a little, concerned with trying to chase risk higher, as we've just had a nice bounce in risk up here. But that's not the only thing that's moving. You go look at the US dollar Norwegian krona. We just hit the 127% of this extension. Now, I believe that we have an ABCD here completing or trying to complete, but that doesn't mean that I'm right, because what I see is more support. Let me get rid of this really quick. The D. Let's get rid of this really quick. What I see more importantly is this is really the big breakout point, very big support coming in at 880. And if you guys are harmonic folks, this right here suggests that we reverse near here. So, that's something else to think about. Okay, this is a good currency that actually mimics risk inversely, right? Then you have the dollar Canadian that is perched up near its highs. I'm going to tell you one thing. This dollar Canadian, this has all been really key risk all of 2021. Really, I mean, I should say, all of 2021, going back to, post-COVID lockdown, breakdown, we have not been able to scale back above 130. I think the dollar Canadian of any pair, and I have no position in the dollar Canadian, this thing could squeeze past 130 in a very illiquid market over the course of the next couple of days, and we could see this thing, really, really knock out some shorts. And again, this is one of those other things that we're looking at that suggest, hey, I don't know if I really want to be long S&Ps this morning, after seeing the dollar Canadian perched up against these highs. And you have crude oil, which actually, and this goes with Norway too, you have crude oil that's rolling over as well. Okay, so you got a couple of different things moving here. Now, that's not the only thing that I'm looking at this morning. I shared with you guys, Norway, right? Yeah. The dollar Canadian, the Aussie. Then you have the dollar Mex, which, if you look at the dollar Mexican peso, I've been looking to buy the dollar Mexican peso. I've had orders for the last 2 weeks sitting down at 2060. If you guys are in the ForexAnalytix community, you listen to the daily webinars that we do for the ForexAnalytix traders. Just for those of you that don't know, we have webinars after we're done here, the free ones. We have webinars that are exclusive for our traders only. And the morning edge is in literally 57 minutes from right at this moment in time. And anybody who's been listening into the morning edge knows that I'm trying to buy desperately the dollar Mexican peso as we approach the 618 retracement. The emerging market currencies like the Rand and the Canadian and the peso really have stopped going higher over the course of the last couple of days. So, you got to think about that, the emerging market currencies are very, very, how should I say? They're susceptible to inflows when risk appetite is strong. And so, over the last few days, we haven't seen the Mexican peso strengthen any further. We haven't seen the South African Rand really strengthen any further. By the way, the Rand is also at the neckline of the big inverted head and shoulder pattern that I've been following. So I'm sitting here just looking at, these currencies thinking, I wouldn't be chasing risk up at these levels. So if you're out there buying the S&P this morning, expecting for a continuation of the turnaround Tuesday that we got yesterday, I think that you might find yourself, a step behind everybody else, maybe getting in a little late here. So those are just some thoughts that I had initially. And, I think it's something that,
take it into consideration for your, for what you're going to do today.
Yeah.
Yeah.
So anyway, this is something I think we should be monitoring. I don't necessarily think that the stock market's going to go to hell in a handbasket, but it's not. I don't think you should be chasing it up here. So just some thoughts. So, Dale, what else you got going on this morning?
Well, we're going to be talking to Keith Dicker at IceCap Global, and going to talk to him, see what's melting up there on the ice cap, where he's at.
Morning, guys. I'm here too.
Hello.
Yeah.
Hey,
there you go.
So,
Hey.
What's going on, Stelios? How's it going?
What's going on? Oh, good. Yesterday was a solstice, like Dale said. We did get a reversal today. That was though because President Biden said that he's going to figure something out with Manchin, whatever his name is. So the market is hopeful again that something might get done on that package. But overall, I would not trust these moves on these last few days of the year. Like Blake said very correctly, you can get low volume moves that can trigger all kinds of stops. So it's dangerous, but it's also an opportunity. Like the dollar CAD that Blake talked about a little while ago. I think that's a great case of something really close to major levels. And if those go, then you're going to see an exaggerated move on low volume. So to summarize, I think it's going to be tricky markets, and I would recommend.
Sitting on your hands
or lower positions, taking less risk than usual.
If people can't remember how things like that could happen, you only have to think back to the day after Thanksgiving. Everything happened. You let go. It's a holiday, and then we had that huge, the Omicron announcement, and we had that huge kind of a crash. Crude was down $10 that day. It's a pretty big move on a partial market day.
Yeah, it is. And that can happen. I was just, we were talking about the Canadian, Dale, and then you mentioned it again. And then I started looking at, while we're all sitting here, I started looking at like here's the pound Canadian. We're above the 200-day moving average. Right. And so this looks, nice and squeezy. Right. Especially if we could get like maybe above the 618, that would squeeze even further. Aussie Canadian, I was looking at this going, I don't know if I'd really want to be bearish that. I mean, that's that looks like we're putting in a hard reversal here, right? So you start looking at it like that, and you go, I wouldn't want to be short that. And then you got the New Zealand Canadian that looks like we had late, false breakdown here. And then you have the Euro Canadian that, possibly put in a false breakdown over here. And then you're like, okay, well, here's every Canadian pair. And then we can go over to let's go over to really quick. Let's take a look at the, Canadian yen, which, looks a little weaker. The weakest of like the Canadian pairs. Why couldn't we see a Canadian move across the board? Not just the dollar Canadian, but you have other Canadian pairs that just start ripping. So that's possible in a low volatility, slow market. And I know everybody, and here we are, we're just watching the S&P just over the last 15 minutes, peeling off another 5 points. So I don't know. Hey, Stelios, so how are you feeling about precious metals?
They're up a bit today, but really I stand by what I've said. I think they're going a lot higher eventually, but I think we're not done yet. We have probably one more flush which means dollar spike, metals lower, and then we make a low, which I think, especially for silver, is not going to be touched for a long time, if ever. But yeah, so I'm still very cautious about them, and I'm definitely not doing anything pre 2022 unless we get a drastic sell-off somewhere. Then I might get in before, but I don't see that coming in the next few days.
All right. Well, let's see if we can get some volatility there. So, Kman, are you still here?
Yes, sir.
Hey, so you've been playing the yen pairs quite aggressively recently, and the dollar yen has actually moved up towards, well, it's actually stalling here, above, let me just say, above the 114 level, but as we approach the 618 fib, a little bit intraday highs. I was thinking that we might reach for the 114.50 to 114.70 levels up here. But it seems to be stalling at current levels. What are you doing with the yen right now?
Me personally, I've been in just scalping the yen from the short side, but since I think I'm going to stop it right now. I don't know where it's really going to go, but as I said before to Dale, I mean, it wouldn't be the first year where we do highs in yen pairs just on the end of the last day of the year. So is it end of year flow? Is it just the positive vibe? By the way, there was an article out overnight, and Paulie brought that up, and then I found the article saying that, let me take it back. The US Army creates single vaccine against all COVID and SARS variants and could be bringing it out within weeks.
Yeah, I saw that. Yeah,
is going to be enough to drive an end of year rally? Who knows?
Who came up with it? The Russians?
No, the US Army.
Oh, the Army.
Not
okay.
USSR. No.
Yeah, that's what I thought you said. Okay.
So
yeah,
they weren't sure to create the end of year rally, but really, I think we are just in flow-driven markets. Most of the algos, we need to know, most of the algos are going to be switched off, like the trading algos, for the end of the year, because they prefer not to trade in such markets where data and news, there it is, have not too much to say, but end of year flows direct everything. So we might have a few funny moves in the week to come, the week and a half to come, where takes are not going to have too much to say. We've seen strange things in the past, right?
Yeah, we have.
Even just before the virus, I remember the end of 2019, 2020 was a bit of and the start of 2020 was a bit of a crazy one as well, right? Just for the last 10 days, 15 days of the year, and then we saw like the first day of Jan continuation, and then all of a sudden a reversal of everything.
What year were you talking about?
I think was it not over 2019, 2020, or
actually, so 2019. This is the year before COVID. Yeah. I remember I was at the Gelos office as I was, when I was prop trading, and I was in New York, and we were there for the holiday party, and I remember that there's a 200 pip move in the Aussie dollar, and it was huge. I mean, like hell, you did not want to step in front of that thing, and that was
but that's what I also want to warn traders for, is that we can have such moves at the end of the year, where nobody else is in, and then there's one client, or
it was 2018.
Call it BHP, who needs to manage their books, and it comes in with a couple of yards of Aussie, and nobody is standing in front of it. Either way, and you can have 200 pips moves.
Yeah, so if you're looking at it was 2018. That's what it was. And I remember going. It was after the it was after the party, or it was the day of the party, and I'm like, I'm going to short some Aussie, and I'm like, yeah, I just don't want to worry about it. I mean, because for me, the size I was trading at that time was about 2 million on average Aussie. So I was going to short a couple million Aussie going into this party, and it was bearish. It was like I was looking at it like this, and the holiday parties are always December 15th or 18th, something like that. So it's right around here. And I remember looking at this, very bearish channel, and it was like we're probing these lows. And I'm like, man, I feel like it's going to break down. And I remember not being short and watching it as I'm flying, back to Arizona from New York, from the city, and this move happens. Yeah. And you're right, it was like a 200 pip move. That's a real move right there. That's a real spike, and you're exactly right, Kman. It was like flow driven, right?
Yeah. Again, when I was still in banks, we had this evening dollar Canada fixing to do, and for one of the Canadian money managers, pension funds, if I recall well, and there was just nobody left in the market, and we had this flow to do. I don't recall which year it was. We had this flow to do at the end of the year, and it was like, I don't know, $500-700 million. I don't recall it exactly, but we took dollar Canada for a ride of 150 points because there was no one. But yeah, it doesn't mean anything for the direction of the market. You know what I mean? It doesn't mean anything for the dollar Canada should go higher. But if somebody comes around with such an amount to sell in an empty market, they can. We did
have data. I'm sorry, we had data come out. So Stelios,
2.3% quarter-on-quarter US GDP versus 2.1 expected. So slightly better than expected.
Wow, we're humming along. Hey DJ, post a link for me. I want to see that article. I don't like when they run simulations. It means they're getting ready.
What's that?
Anyway, the IMF, World Bank, and 10 countries held alarming simulation of global financial system collapse.
Oh, buy gold.
Yeah.
Buy gold and you'll be fine, Dale.
Well, Bill Gates did a simulation of the pandemic before it happened.
Well, Bill Gates also said the pandemic is going to be over in 2022, and he's the guy pulling the levers. And he actually implemented biometrics into my arm through this vaccine, and then ironically, the U.S. Army is going to find a cure for COVID because it was given to them by the secret super scientists at. So look, it's all happening. Then we're going to have a financial collapse. I should be buying gold, and I'm going to go dig a bunker as soon as I'm done with this webinar. And I am going to. Can I buy
your Christmas decorations?
No, I'm taking a few of those with me, but I'll leave the ones that I don't need at the door. But it's going to look like a trap door because I'm digging, so it's underground.
Yeah.
Anyway, all right.
Yeah, I know. Gloom and doom in front of Christmas.
I swear to God, I'm gonna go. I'm a jumper today.
All right. Well,
you guys are freaking me out.
Blades. Keith
Merry Christmas, bah humbug. Screw that. I'm gonna go buy gold and Bitcoin.
Right. Wait a few weeks. Wait a few weeks. All right.
Sorry about the joking, but I do think it's kind of funny. But you know what's interesting though, I gotta say, I know you have your interview coming up. It is interesting. We were talking to. It was our neighbors were over for. They were over. We were drinking some wine the other night, and they and by the way, just so you know, they're Republican, unvaccinated. They're like, it's all a conspiracy. That's their opinion, and we talk about. We just have wine and we can talk politics, and it doesn't really matter, and we joke around and whatever.
That's pretty cool.
Oh, we do. Yeah, I mean, they're dear friends of ours. But so we were sitting there talking about somebody, and one of them said, "Yeah, no," and this was not a joke. That like in 2022, I think it was Bill Gates said that we'll be past COVID this next year, and he's like, and he was like, I don't, conspiracy theory or not, if you think he's the guy that's that's really behind it all. maybe we get some sort of vaccine and eradicates in 2022. And I was like, that's very funny. And then this article comes out today, and it's like, that's interesting, right?
Yeah.
Look, we made about as much money as we're going to make on these vaccines. So let's go ahead and cure this thing, right?
Yeah, I know.
Anyway, but
bro.
Hey, you guys have a good one today. I'll see the rest of you all, you guys ForexAnalytix subscribers. See you in about 40 minutes on the Morning Edge. Thanks, Stelios. Thanks, Kman, for all of your great stuff today. And Ryan's not here, right?
Nah, he's on
building a train.
dad duties.
Yes, dad duties. And hey, if you guys are out tomorrow, because it's Christmas Eve, have a Merry Christmas, Happy Holidays if you don't celebrate Christmas. And but for the rest of you, we'll see you tomorrow. We'll be here for the data. All right, it's all yours, Dale.
All right, thank you, Blake.
Thanks, Dale.
Hi, Keith. Welcome back to F.A.C.E.
Hey, Dale. How's everyone this morning?
Good. How are you doing, Keith?
Good. I'm trying to turn on. Do you want me to put a video on, or are we just doing audio? What do you prefer here?
Yeah, do you have anything to show as far as a screen share?
No. Well, no. I just have a good face for radio. I think that's what I'm good at. We'll just have a good conversation. But if
all right, go ahead. Turn on your video.
If you want to put it on, we can.
Do that.
Okay, I can see you. It's not letting me turn it on here for some reason.
The video?
Yeah.
Okay, well then I'll just share my screen and we could move around and talk about different markets. Now I know, Keith, that you've been a bear in bonds for a while, and you were looking for some type of problem. Am I correct in describing that you thought there could be problems with sovereign debt, or was it really across the board, all kinds of debt?
Yeah, so we're so first of all, we're based here in Canada for everybody if you're not familiar with us, and I was offshore for about 12 years as well. So I have a pretty good background in what we're call how global money moves around the world, especially for private family offices. And one of the main, I guess, experiences from that, a lot of people probably they're just not aware of, is that a lot of money in the world, they just run away from trouble. They're not trading. They just want to make sure they become wealthy from selling a business or something like that. No one got wealthy from the stock market. They just want to simply preserve what they have, and the key way to do that is to run away from trouble all the time. So that's just a bit of an overlay here. So with us, with us at IceCap, we run two kinds of portfolios. One is a long-term, long-only global macro focus. And so for that strategy, we've been very good at avoiding losses in the market. And what you want to do with global macro really is it's not day-to-day, week-to-week, monthly trading. Is identifying when a big turning point is going to occur, or the conditions are set for it to occur. And
do you think that we might have one? I'm putting up the dollar here, Keith, because there are some counts that are saying this is a bear market rally in the dollar, and that we could get to 98, maybe 100, but the story might be, if you want to stay away from trouble, that if this turns out to be a failing rally and dollars heading down, is you have to be in the right currency in a situation like that. Maybe the dollar takes a year off. It had a 1-year rally to squeeze out. Down here, everyone was expecting a continued bear market in the dollar coming into 2021. Now everyone's expecting a continuation of the dollar recovery into 2022. What's your work saying about it, the buck?
Yeah, well, I mean, short term, that could certainly happen, but
not short term, just long term.
Yeah, long term, we are a very big dollar bull.
Okay. And milkshake theory?
No, what theory? Sorry?
The milkshake theory? you know, a lot of the dollar bulls have this milkshake theory, and it's really because of emerging market debt denominated in dollars. And, you know, plus I was reading something about the euro dollar in Europe, you know, that was started 50 years ago, that that market seizes up once in a while too, which creates a bid for the dollar. So
Yeah,
what's your scenario for a big bull market in the dollar from here?
Yeah, there's a lot of similarities with that. So so I'll walk through on why we expect this to happen. But then but we also manage a global macro fund, and we can be directionless or neither bullish or bearish. We don't hate or love or hate any market in that strategy, and that can have very short-term trading. So we're involved in all parts of the market. We're not stock pickers. We're not bottom up at all. It's really top down, moving around. But what a lot of people maybe don't appreciate with the dollar, it's our view. Things will get so bad, so stressed, a crisis will re-escalate, stress will re-escalate around the world. And it draws money into the dollar, into the overnight treasury market, because it's the only market that's large enough and liquid enough to park money overnight, to get it out the next day. The price hasn't hardly moved at all. You can't do that anywhere else in the world. You can't do it in yen, Canadian dollar, not real estate. You can't do it in gold. I mean, and for that reason, it's extremely important to understand. Okay. However, so the main view that we have, though, is so first of all, and it's not complimentary towards humans, but we really are sheep. Most people have a linear perspective of the world. What has happened last week will continue this week. What happened last year will continue, and stuff like that. But the big turning points that take place, they're so easy to see, but yet people don't get to see them. The industry doesn't share them. The mainstream media doesn't share it. The big banks and so forth. So first of all, this is the way we expect things to move along here. And I hope this is helpful for everyone that's listening today. Yeah. So first of all, we've had this perfect setup, and what I mean by that, so long-term rates, they peaked in 1982. Yeah. So depending on where you were in the world, it could be anywhere from say 15 to 20%. And from that point onward, rates they continued to went down. So we all remember Bill Gross, maybe at PIMCO. He was the they call Bill the bond king. Yeah, he wasn't the bond king. He was the duration king. He just happened to be in the world's greatest environment with rates going down.
They call Gartman the commodity king, and on Twitter everyone fades him. So
I know he's it was pretty easy to make fun of him,
you don't want to be kinged on CNBC, and you don't want to be man of the year in Time magazine either, do you?
That's a fair point.
Yeah. All right.
But with rates coming down so much, and every time there was a crisis around the world, the central banks or on the fiscal side, they would walk in and bail people out. And, by doing that, they just simply push things down the road a little bit. And then all of a sudden, the housing crisis hit back in 08, 09. And what happened then, everyone went to zero and negative rates, but they should have let the market reset. So let banks go under, right? Let shareholders absorb the losses and so forth. That didn't happen. So instead of having long-term rates start marching higher again, like they did in the early 60s up to the early 80s, the entire yield curve has been flattened for 12 to 14 years. And this is incredibly important. So we've had, overnight rates at either 0%. We've had negative rates in some big markets around the world. Everyone's been doing QE. And what this has done, it's enabled debt to absolutely surge around the world. So public sector debt, especially at the sovereign level, same at the state or provincial level up here in Canada. Household debt. Up here in Canada, we have this incredible housing market, bubble, or depending on which side you're on. I don't know if we have many Canadians on the call today.
Yeah.
But
Well, we look, it's happening globally. What about the market in the U.S. is the same?
Yeah,
This is
it's
blown
just
up.
yeah, and people, they say, well, it's good value and stuff like that. But what they don't really understand is that there are a couple of things happening here. One is that low rates have really enabled borrowing. Central banks, especially here in Canada, and the federal government, they've been extremely clear. So one thing as a money manager, you never take sides. You never say, hey, I lean left, I lean right, or north or south. It doesn't matter. The most important tool you can have as a manager with your money is simply understanding how the policymakers move, what they do, and they're always incredibly consistent. So as long as you appreciate that, then you can say, oh, wow, okay, we know what's going to happen. So in Canada, for example, they've been very clear at the central bank level, as well as the regulators and the feds. They are not going to crash this housing bubble. They're not going to do it. So instead, that bubble will get pricked by some event outside of Canada, which we expect will happen. So Dale, like
China?
since. Yeah, so the people in Vancouver, especially, they say there's a lot of Chinese money coming in and going to Toronto as well. They say because Vancouver is so awesome and everything. It's a lovely city. However, you got to look at the other side of the coin as well. And instead of saying the Chinese money is coming in because the assets are so attractive in Canada, instead you have to look at it and say, well, why is it so bad in China? Why do they want to get their money out of China? You got to look at it from both sides. So we've now had, again, like 10, 12, 14 years now of this incredible risk-on environment where debt has been exploding higher and rates have not moved higher. And so in our world, when we look at rates, you also got to look at not only sovereign rates and short-term and long-term across the yield, but also credit spreads at the investment grade level, is what the high yield level. And, because the central banks have tried incredibly hard to suppress risk or volatility on the yield curve, it's forced more and more investors to move out into the bond market. So out into duration, out into credit, in emerging market space as well. And, people have been paid for that, that they've gotten their income throughout the year and some capital appreciation. But what's happening now is that because the volatility has been suppressed across, equity markets, sovereign debt, credit spreads, fixed income markets, especially if you look at your volatility, across all the majors to the dollar, you'll see it. Even in commodity markets, volatility has been suppressed.
Oh, yeah.
Everyone's been lulled into this, this false sense that risk does not exist, and especially from June of 2020. And now all of a sudden, the conditions have changed. And with that, you're starting to see some stress, bubbles, or just things are happening to say, oh, wow, it is not a riskless world. Events can happen. And when that happens, all of a sudden, really bad things happen. So credit spreads start to widen. Commodity markets are going well. Like the energy sector, for example, what governments around the world, because of their, again, this is where if you understand policy, will say, yeah, absolutely. And it doesn't matter if you agree or disagree with it. The entire Western world, they're adopting green energy policies. They're using climate change as their platform for that. So because of that, they're forcing out coal, forcing out the use of oil and so forth. And they're trying to encourage everyone to use green energy. But if you look at Europe right now, with the price of natural gas, it's gone through the roof. Like, it's just, again, it's creating these markets where financial markets are going to start to affect economics, which affects geopolitics and so forth. So we're in this world right now. So we've created this sort of a map or a path to expect. So you can sort of picture going from left to right. We've already experienced a credit event back in March of 2020. And central banks came in the US and really sort of cleaned it up or bailed them out. But the next bubble that's up is the emerging market world. Once that pops, we're starting to see that now take place in Turkey, especially. Then all of a sudden, then money starts to move. People will say, wow, you know what? I made some good money over the last 18 months. I'm going to start to pocket this. And all of a sudden, that little snowball becomes bigger and bigger into the snowman. Like the winter analogy, Dale. We're in winter now here in Canada.
Yeah.
We have
Yeah.
snow.
And yesterday was the beginning.
Yeah, absolutely.
Right. Solstice. So, you'll basically, we're going to see, bond bubbles popped, equity markets lower, strong dollar, deflationary move, real estate, one of the most illiquid investments, suffer as well. And we don't know what the pin is. It's going to pop the bubble. I have my guess. My guess is China.
Yeah, it could be,
But maybe not till after the Olympics. They want things to look good, but already the virus is keeping NHL players from going to compete. And
I mean,
yeah.
So sorry. So like, but COVID,
It's
this new wave that's coming through. That's important as well. So depending on where you are in the world, like if you're in the U.S., you say down to the southeast. I've had friends down there, live there. Other friends have traveled there recently, and they said, "Hey, life's going on. Like it's not that big of a deal.
Life goes on.
Life goes on. Up here in Canada, and especially where I am, people are kind of nervous all the time. Like they're going towards not hard, but pretty close to hard lockdowns again coming up. Small businesses get hurt with that, and again, that's
I know a couple of
policymakers
Canadians
are going to do.
Yeah, I know a couple of Canadians that only became vaccinated because they couldn't go anywhere, do anything without being vaccinated. Can't go to a restaurant. You can't get on a bus. You can't do anything without being vaccinated. Is that true?
Yeah, absolutely.
Yeah.
And you have the social aspect of it as well, Dale. I mean, like people will just, you're not allowed to have the conversation about it either, or ask questions. And, like
it's not in our DNA to isolate ourselves. We're, we all have herd instinct of being part of a tribe or something. And isolation is, we probably have, a global psychiatric crisis happening at the same time. And what you're saying is, Keith, these are the good old days to what's ahead.
I think it's going to be, so think about it. I mean, sort of, you asked like which pin will sort of prick this. Again, we're pretty confident it's going to happen in the emerging market world. That's where it's going to come from. And people will say, well, you can't get contagion anymore. There's, the linkage is not as strong. Central banks have a lot of FX reserves and all that stuff. That's nonsense. That's not the way money moves around the world. The moment you suspect losses are going to start, you move your money, and then one transaction sort of leads into the next and the next and the next, and that's what contagion is all about. The industry. I was around, of course, back in the 90s when the Asian FX crisis hit. And I remember they're all trying to, show how much FX reserves Thailand had over Malaysia and things like that. And it didn't matter. Money just ran immediately. And so that's what we'll see coming up here. But in terms of the pathway and the way that we suspect it'll go, after the emerging market world, and then you would have, for example, like CAD, Aussie, Sterling, that market will get hit. And this is just the FX market. You get knock-on effects everywhere, of course. And then Euro, the Eurozone, it's probably the single biggest financial time bomb that's ticking out there. When the ECB, if they try to talk or sound hawkish, don't believe them. The moment they raise rates or even try to raise rates, it just destroys their banking system. And it destroys their pension fund system. The ECB itself, if they will go mark to market on their bond portfolio with any the slightest tick in rates.
So do you think the UK will get away with their interest rate hike? They did it.
So right now, everyone's going to try to raise rates or sound hawkish doing it because the Americans have said, hey, this is what we're going to do. And then again, you have to say, you shouldn't say, hey, I think they should do this or they shouldn't do that. They've now been very clear. We're going to raise rates. We're going to stop QE. We're turning hawkish. And that's just going to start to suck the energy and the air out of the emerging market world, especially. And then when you lay on top of that deteriorating credit conditions. So again, like if you're outside the U.S. And you have U.S. dollar denominated debt, and your revenues are in local currency, or as credit spreads widen, banks got to call it. It's just the world doesn't work with this, and one event leads to the other. So after euro, you have yen is there, and then you have the dollar as the last man standing. So our view on the dollar getting incredibly strong from here, it's not because the U.S. it's really awesome and great and everything. It's just that it'll be the last market to experience any type of an adjustment or a crisis. And when it does, that'll be the biggest trade of your lifetime coming up, is to short the dollar. But what I would suggest, anyone that thinks the US is the first market to have the big crisis, I think you're going to lose a lot of money on that trade. Instead, you have to change your thinking and your order. And so that's one of the events. I mean, the US is the biggest market in the world. Everything flows to the US and so forth. But the world's a big place. And again, I've been outside the US for a long time. Home country bias is rampant everywhere around the world. I happen to live in a place that had zero home country bias for over a decade. And everyone I worked with, they're all expats as well. So if you remove, with home country bias, for example, if you look at the Canadian equity market or Canadian investors, they're all holding Canadian equities. And you say, well, why don't you hold, Australian banks or German banks or American banks? Oh, that's too risky. And then you chat with the Australians, why don't you hold Canadian? No, we like our stocks here.
That's an interesting concept. Yeah.
Yeah. Again, things are set up here, to have a pretty big move. And, we haven't even talked inflation. So by the way, the easiest way for the Americans to fix their inflation problem is to let the dollar run hot and to have equities sell off. I mean, that's all they need to do. That'll be an instant cure. Of course, it creates total chaos in every other market and country. So every other market will experience even higher inflation. But again, everything can't be constant in the world. One market will offset the other.
Interesting, Keith. Just something I've noticed is on the two big sell-off days in equities, dollar didn't catch a bid this time. So I think that we're going to see what happens here. When or if this is a policy error by central banks and the Fed, and they have to reverse. We'll see what happens here in the first quarter. I think it's going to be 2022 is going to be pretty interesting, FX wise, and really all asset class wise. So appreciate your view. I can see that happening too. Just liquidation of everything, because you need cash to service debt. You even sell your kitchen sink. So appreciate that. And gold, same story. Will gold do okay in a deflationary environment like it did in the 30s?
We're not expecting this big deflationary environment to come up. Remember, you can have inflation in some markets, deflation in other markets, and so forth. I just suggest that the easiest way for the Fed to cure their inflation story is to do that. However, with gold, we neither love nor hate gold. We had a pretty big position in gold back in the early part of 09, 10. And when it popped up, and then we reduced it quite a bit. So our view on gold is that inflation doesn't matter. If I said to you, a year ago or 2 years ago, and I said, hey, you know what, inflation's going to run 6, 7, 8%, what would you buy? And a friend of mine said, hey, let's buy gold. And then all of a sudden you're like, oh man, I haven't made money. What about your second favorite trade? And you say, well, let's short the bond market. So our view on gold might be a bit different than the mainstream. We do not see gold as a protection against inflation or anything else. It's that market will catch bid, a very strong bid, as soon as crap is happening around the world. So what we expect to happen, it's a really good market for gold that's coming up. We're not quite there yet, but the opportunity to make a ton of money on gold, it's coming. It's there soon. But the initial jump higher. So the key for gold, you want to see gold staying strong or flat at worst when the dollar is really surging higher. So that means on cross rates, gold is doing really well, versus sterling, euro, yen, CAD, whatever. But the moment that all currencies are declining relative to the dollar and gold is holding its own, and that's what we're looking for. And that's when we'll start, doing a pretty strong and aggressive rotation out of, a dollar allocation, towards gold, for example. So, and you just got to be patient with these trades. Let the market come. Let the market come to you.
So let the gold come to you. At what level do you think you're going to be able to pick it up? 1,400, 1,000?
Yeah, again, it's not a level. We're looking for the market reaction relative to. So let's just say gold. I mean, gold can come off 10% next week. Like that's nothing. Again, we want to see how gold responds to a surging U.S. dollar, and when it passes that test, and it doesn't matter then if it's at 2,000 or if it's at 1,600. That's when. So what you want to do, you for every market, because we invest in a lot of different markets, and nothing is ever 100% assured. But you want to take these asymmetric trades or asymmetric positions. So, like a very easy one today, for example. So if everyone knows the VIX usually, if you're in the market a little bit. Like clockwork, whenever the VIX gets up close to 40, now there are a number of ways to make, well, you probably have a 95% probability of making money on that trade. And then maybe like say a 10% chance of really not making money. But as soon as you see VIX hitting, say like high 30s or 40, there are a couple of short things you can do, to capture that, whether you want to go on the equity side or even the volatility side. But something like that event, it might happen once a year.
Well, I think
3 times every 2 years.
Yeah, some of the outcomes you're talking about, I wouldn't want to be short volatility. VIX could go to 100 under those circumstances that you're talking about.
Yeah, absolutely. But you'll also see volatility surging in the FX world as well.
Good. Oh God, from your lips, buddy. We're all,
credit spreads widen.
Yeah. Okay, I'm ready.
Pretty good.
Where
are you based? Yeah.
I'm in outside of San Diego. I've been preparing my whole life for what's coming in 2022. How about that? I'm ready. So I want to wish you and your family and all your associates at IceCap Global. I want to wish you a happy holiday and Merry Christmas, Keith. Appreciate you coming in over the years and bumming us out with reality. But I really believe that people have to take look at both sides of the coin, because in this business, anything and everything will happen.
That's great. Yeah, absolutely, Dale.
Anything and everything. Yeah. You have to be
happy
open
holidays to everyone. And I know you have people here from all over. So to give you an idea, up here, we're in Nova Scotia. So it's getting pretty cool these days. It's negative Celsius. Yeah, we're fine. We're fine. We're good. Okay, guys. Thank you to everyone.
Build a snowman and name it Dale Pinkert. That'll be like my trip to Nova Scotia.
He would be a handsome snowman, wouldn't he?
Keith, really happy New Year, and I hope you're on the right side of everything in 2022.
That's great. Thank you, Dale. I appreciate it.
All right, Keith Dicker, everybody. You can follow him at IceCap Global. Here's his handle right here at IceCap Global. There's Keith, and check out his website. And that's going to be a wrap, everyone. Good hunting. The rest of the day, kind of take it easy and wind down. You could join the crew in 11 minutes for the morning edge. Adios. And you know what? Don't just count your pips, count your blessings. Everyone can find one. See you guys tomorrow.